All right, guys, welcome back to another Sunday Market Outlook. In this video right now, as we always do, we're going to go through the trades that I took for this week, give you the reasons why I took the certain trades, why I took them, where I took them from, where I took profits from, and then also give you guys an outlook in terms of what I'm expecting going forward in the market this week. It is a very important week, and this week I believe it's election week. We just had NFP week. As you guys can tell from this massive price action. In fact, it wasn't even this, it was this section here. And as you can see from the top right corner, I have my journal here. This is kind of my template for my journals. This is my normal template for marking markups. And then I also have a blank template, but I've not got that right now. But yeah, also, if you do have any questions, drop them in the chat and I will check them nearer to the end. And yeah, the recording will either be on the Discord for Leveled Up or in my own Telegram channel. Just type in sniper ads or check my story and you'll see that there. But yeah, that's pretty much it. Let's get straight into the breakdown. As you guys know, I primarily trade gold. I know a lot of you guys also trade gold, so it's a good sort of match here. Now we'll start off from the left from Wednesday last week up until my recent trade. All my wins and all my losses are here. I took a majority of these trades over here on challenges, and then these two trades over here were on one on a challenge and one on a funded account, which secured me a payout, which I just got paid out for just a few days ago. Now, just coming from the left-hand side of the screen here, as you guys know, with gold, when it comes to all-time highs, it doesn't do this so frequently, but in the last sort of 6 to 7 months, it has been making all-time highs almost every single month now, okay? Maybe apart from one of the months. But this has been a very tricky situation for gold. And again, that kind of does mean there's a bit of uncertainty in the market. You could say the market makers, whenever gold is going up, that's almost because it's a safe haven for these big investors, the market makers, the institutions, whatever it is, okay? Because gold is that, you know, that's what backs all the currencies out here. And, you know, if people are feeling unsafe, unsure about what's happening in the markets, they'll put money into gold, and obviously the price of gold will rise. Now, over here, I did take a pretty sloppy entry. If we go to the 30-minute time frame, you guys will see that I entered pretty far from my support zone. And this is a common mistake with a lot of traders. You will tend to see that this is, and again, I also take losses, right? And I'll happily admit it. But again, it's all about risk to reward, win rate, and sticking to your plan, right? You can have a 1 to 3, 1 to 4, you know, even a 1 to 5 risk to reward, for example, and even a good win rate. But if you chop and change your system, then you're never going to execute on those risk to reward trades when they do play out, right? You'll end up missing them. You might end up taking them in a sloppy area, and then that'll, you know, mess up your risk to reward and overall your P&L for the rest of the week or for the month. Now, as you can see here, the idea was correct. The trade idea was correct. So if I go back, you guys can see here, the trade idea was correct. The market went down and it ended up bouncing from this major level of support. And if you guys go back to the previous Sunday market breakdown, which is uploaded in the Leveled Up Discord, you'll notice I plotted this level of support way in advance. I believe I plotted it when the market was up here. And as you can see, we dumped down into this area. And then on Wednesday, we actually had a long rejection from this area and then a 30-minute engulfing. Now, I prefer to actually go ahead and enter. I should have entered potentially around here. After this long engulfing candlestick, I could have entered here with a stop loss below that wick. But I entered pretty late because I was uncertain. And that's what caused me to have a smaller stop loss. So if I go back to it here, you can see right here, I entered after not an engulfing here, but an engulfing here. Oh, sorry, another engulfing right there, which was a 30-minute engulfing, and I had a very tight stop loss, which didn't make any sense, right? This stop loss was around 40 pips, and I should have had a stop loss around 100 pips if I wanted it to be an accurate move. But again, notice how the market initially came into my level of support. It came into my level of support, deep into it, then went away from it, broke minor structure over here, and then it retraced into this Fibonacci long zone, okay? But also, more importantly, this major level of support. Don't forget, guys, these levels of support and resistance, it's not like, you know, it's not going to be like a fairy tale story where it's just going to bounce on it and, you know, fly forever. Yes, on some occasions it will do that. But if I had to give you a general example, if you have a level of resistance and then you have a level of support, price can bounce, you know, to this area of resistance and then drop from it in one go, yeah. But multiple times as well, it can, you know, test it a few times if it wants to, and then take off. So it's very important you guys stick to your analysis, trust your analysis, and let the trade play out, right? Because that's what our whole basis is, our trading is based off. support and resistance, supply and demand. And if you start to tamper with your trades, if you start to take profits here, or if you start to close the trade at break even, when it's not even escaped your area of key levels or your area of interest, then you're messing with the trade and you're losing out on potential profits there. So going back, you can still see though the market then from this area. I'll go into replay mode and I show you. I'll go to the 15. You can see here that the market kind of gave us, if we just take it off, a clean structure from this area of support. Now, remember, the market's given us a big drop in price. Usually after a big drop, the market will have a retracement. As you guys know, you have a lower low, lower high. So that's what I'm looking to try and target and catch the buys up to the lower high. Now, in this piece of price action, the market's made a high, a higher low, and now a higher high. So now what I was looking at is catching the next higher low and taking it to the next higher high potentially. So if we turn on the drawings here, you can see that the market came and broke above this level of support, this blue level of support over here, right? And again, you guys can see when you look into more of my teachings, you'll see how I mark up these areas and things like that. But I don't want to go into too much because it's a bit long. But as you can see here, 15-minute engulfing occurred. I took an entry here, put my stop loss safely below this low. And if we let this play out, you can see the market gave us a clean rejection. It gave us actually another, if you just pay attention there as well, it actually did break above our support, retested one more time and took off almost exactly like it did here, but on a smaller sort of time scale right there. And as you can see, the market came back into this level of resistance. Now, because of how the market closed above this area of resistance on the 30-minute time frame, as you can see with the strong engulfing, I was happy to hold this position. So notice how the market after this point broke above, retested the support, the resistance turned into support, and then continued back in my direction. Now, they were the two main trades that I took. This next trade was a little scalper during a New York session for a one-to-one that I took live with the team, but that's a little bit of a scalp trade. The next trade here was a sell that we caught. And again, this was based off a Fibonacci short. So if we look over here and we see the market correctively moving to the upside, higher, high, higher, low, higher, high, massive drop in lower, low, low, higher, low, higher, high, higher, low, higher, high, higher, low, little one here, and then correct, just overall correction. This is minor structure. This is major structure. We came into this major level of resistance now after a long retracement, and it was in a discounted range. So this is my call, especially with the timing. If we look at the time right there, 2:30 p.m. UK time, this is New York Stock Exchange open, I believe. So there's a lot of volatility here, and where there's volatility, there's manipulation, right? You have to always understand this, guys. These areas that we're marking up with support and resistance, supply and demand, these are decision points, okay? What does this mean? A decision point means the market makers, institutions, whoever you believe to move the markets, whether it's buying pressure, selling pressure, whatever it is, if you look back in time, you will notice these areas of the big moves, they kind of like explode from these areas during specific time windows, right? And I've said this in multiple podcasts, and you guys can go back and backtest these timings that I've mentioned. I mentioned it in Raul's podcast. I mentioned it in the Words of Risen podcast. And those type of hotspot times, and one of them is the New York Stock Exchange open. So 2:30 p.m. UK time, the market gives us a close above. And at this time, usually you won't, you may find these rejection and engulfings working, but I prefer to be aggressive during this time. And again, that's where you can see the fast moves. So you even had like a little gap down over here on Thursday, and then the market pushed to the downside. And again, if you just look at the Fibonacci retracement from point A to point B, and if you're wondering where I did that from, that's from this high to this low. Okay, I took buys up into this area and notice how the market nicely respected that 70.5 to perfection. And then from there, we took the market to the downside. Now, fast forwarding, let's just skip forward to the main trades. I did break these two down with the team, but this trade here, I closed at break even. It was in profit for a while, closed at break even. The market then came up and gave us a flip in structure. If I just summarize it very quickly, the market very simply had a break below this level of structure, retraced from this last high to this low, had an imbalance right here. Fibonacci short during London session, the market dumped. And again, lots of different combinations, as you can see, I'm using when it comes to like, you can say ICT concepts, institutional concepts, whatever it is. But as you notice from here, the market was consolidating during Asian session. The market went up to manipulate, and then it went ahead and distributed during the rest of London session, sorry. Okay. So this was a simple power of 3 move, and I took advantage of that simply by understanding this is an imbalance right here, okay? And the market had broken previous levels of structure the night before, which was this low over here. Once it broke this low, I simply went ahead and went for a Fibonacci short, closed my previous trade out of break even, took profits on this trade. I put on how much lot size did I put on this? I put on 3.5 lots, I believe. And I secured around $3,000 on this trade. It was a very small risk trade. And then, yeah, overall secured that payout and got paid for it on Monday. And then recently, we broke this down with the team as well live. This is a beautiful, beautiful trade. And notice how, guys, I didn't take a trade during any of this price action over here, even though I could have, because to be honest, I'd passed my challenges at this point. I passed the FTMO challenge, so I thought, I'll just wait till the credentials I received them. But the point is over here, the market very simply, it was a little bit choppy, I'd say in this range over here, okay? But then from here, the market gives a nice corrective movement, Fibonacci long from here, and then the market took off to all-time highs. In hindsight, I could have caught this, but apart from that, again, not every single day is a trading day. You have to understand that your edge, your trading performance will be the most, it'll be at an all-time high if you can sit on your hands when the conditions aren't favoring your setups and your strategy, okay? You need to identify after hundreds and hundreds of trades where your trade, what kind of market conditions it works best in. And you've got to come up with a title for that. So for me, for example, I like 4-hour consolidation, 1-hour consolidations, because on the 5-minute and 15-minute, you will find clean trending market structure. Now, for some people, they might find, 15-minute and 1-hour consolidations, because on the 5-minute and the 1-minute, the 1-minute and the 5-minute are trending. And the same for daily and weekly. You might find if the daily and weekly is making all-time highs like this, then you can trade off the 1-hour and the 4-hour, catch some swings, and take profits that way. It's all up to you. It's all up to the trader. And again, a lot of you guys are looking for a mechanical strategy. A lot of you guys are looking for a rule-based strategy. Yes, just to my strategy, to my system, there's an element of rules and discretion, but there can't be so much rules and mechanical system for it, because then it'd be too easy. Everyone would be rich. Everyone would be successful in trading. There has to be that element of discretion in there. And where does that come from? That comes from experience. When you develop experience in the markets, only you can see certain things that you can't really explain to someone else, but you've been experienced in it so much that you can go ahead and take advantage of that environment. Now, an example of that is when the market was making all-time highs over here, it was pretty difficult to see, when the market was going to stop, when it was going to reverse, and so on. Now, what did I do here when the market was at all-time highs? I sat on my hands and I waited patiently. Very, very simply, you saw, if you just see the market making all-time highs over here, it actually went ahead and had a liquidity pool right here. So you can class this as like a wick high. So that was a very, very, important piece of structure right there. The market came down, created whatever structure here, came up, swept that liquidity. And now from here, it made a little range. And now what you need to focus on is the market structure within this range over here. This is where kind of like the magic happens when you're trying to catch a trending environment. You just want to see that liquidity grab. Number one, it's almost like an accumulation, manipulation, distribution sort of system. But we call it, simple consolidation, consolidation, expansion, retracement, continuation, same thing, whatever you want to call it, whatever makes more sense to you. On the 5-minute, actually, this was the cleanest when I looked at it. And again, a little tip you guys can use is using the line chart to highlight the bodies. But again, very simply, the market swept liquidity here, created a little bit of a range. So now the market all of a sudden wasn't making clean higher highs up until this point here. This point here, the market broke below 2 levels of major structure and then created a lower high. This wasn't a confirmed lower high yet because we hadn't made this lower low. But once we did make this lower low, that then made the lower high an official lower high. With this being said, the market has then done a 3-leg extension to the downside. And now, the field is open for whoever wants to take sells. Technically, you could take sells right here, put your stop loss above this high, and then target whatever lows you want. But ideally, you want to sell high to get the most maximum risk to reward. In this scenario here, I called it out, I believe, on the Discord, not on this leg here, but once the market made this next leg right here. So the market's now made about 4 legs to the downside. And now we were in, a territory of a potential Fibonacci long, right? But then as long as the market remained below this high, we were still in favor for shorts. So remember, the trend is your friend until otherwise. And you can see right here, the market had a little imbalance there on the 5-minute. I took shorts right here, put my stop loss above the high. I mentioned this to the team, and as you can see, the market came down, came back up again. You could argue that it was. I also did mention we are going to expect some sort of rejection from this major level of support, which we did. And this is important to make sure that you don't go ahead and close your trade. And then from there, the rest was pretty much history. An absolute insane 400 pip drop called, with the team, and I think it was actually 500 pips from our entry, which is absolutely insane. So again, this is what happens when you have a clear, defined set of rules to follow and a clear game plan when it comes to executing on the market. Now, with trading in general, I know a lot of you guys may just start looking at New York session and, look to highlight an area and just wait for a breakout and just take a trade. But you need to have something that's simple and repeatable, because if it's simple and repeatable, you can then apply that same concept, apply that same, understanding over and over again. If it's something that just happens and you just take it off the whim, off your feelings, just because you saw a random, break, but you can't really measure it, you can't track it, and it's not simple to understand, then you're not going to have, much hope of repeating that. Because when I can repeat a trade like this, a trade like this, a trade like this, a trade like this, I have a good set of about 3 or 4 strong confluences. And on every single one of my trades, I'm making sure that they're present every single time, right? And then again, this was the recent trade that I just took on one of my funded accounts, and I just secured another $4,700 win with this. And this was a beautiful trade. Again, this was joint NFP, so it's kind of risky. But what I saw was, again, I teach this in a bit more depth, but you can see a little liquidity pool right here. I saw that the market was coming down, ideally mainly to this major level of support. And from here, I could see that the market was definitely trending bullish, almost exactly. Notice how I'm taking trades in the same market environment as right here. What happened? What's the similarity? Let's go ahead and just check the similarity. You can literally see a price and then a correction to the upside. Take this price action right here, and let's compare it to what we've seen here. Literally almost identical, right? Literally almost identical right there. And this is literally clarifying why I'm so consistent in the markets, because I'm taking trades in conditions where the market is repeating its same sort of cycle over and over again. Literally, you guys saw that right there. I'm taking another trade right here, as I did a whole week prior. And if I go back throughout this journal, I'll see multiple more. But again, this is a pure example as to why I'm so consistent. And again, I'm not just being arrogant here. I'm trying to just flaunt. It's really just a prime example as to why you guys could have a little criteria for yourself as to when to trade, right? Notice how I didn't take any trades during this section here or this section here or this section here. It made more sense for me to take a trade here. And again, the market simply just came back into this area of support. And once it showed me this rejection, I got in on an aggressive entry, put my stop loss below the low, and I targeted ideally this high over here. But then once I saw the market break above and create this higher low, I decided to hold. So as you can see there, the market's given us a 1, 2, 3 retracement, stayed and respected this high, and then it engulfed and it took a profit and literally took profits right there. If you guys followed me on my story, I think, or my Telegram, you'll see where I took profits with the MetaTrader 5 history tab, trade history, and that was pretty much it. Now, going forward, if I can fast forward, I think we're here already, fast forwarded now. So yeah, what I'm seeing right here is overall on gold. And let me know, guys, in the chat, if all of that made sense so far regarding where I took trades, the psychology behind it. Let me know if I'm making sense so far, if you have any specific questions. Do you trade or at least take a look on London? Do you at least take a look on London and New York session, or only trade and don't look at London? No, I check mostly London and New York session, but it's all to do with price action. And if it's within my session, ideally, New York is the main time, but sometimes you find a trade at London, sometimes you find a trade during Asia even. And I've noticed that most of my trades are intraday trades. So I'm holding trades for around a few hours potentially throughout the day. And rarely during New York session, I'm finding a little scalp for maybe a 1-to-1, 1-to-1.5 with the momentum, because that's when volume is at the highest. Are you doing top-down analysis to find the market trend? Yeah, to an extent. Like, I don't go all the way from the monthly to the weekly to the daily as I used to. You can do that, but for me, my key time frames are the 1 hour, 4 hour, 30, and the 15, and then 5 minute for entries as well. And we have our little 3-minute strategy as well, but that's for another time. Why are there many people on the internet who say that day trading doesn't make money and you can or can't become a millionaire? I can't see you. You can't. Because a lot of people don't put the time and effort into the trading. They'll see, maybe 2 months of, bad results, or maybe even a month, and then they'll just quit. Maybe they'll have 1 or 2 good months, and then they'll have a third really bad month because of bad risk management. And then they'll quit trading, and then they'll, give trading a horrible name. And yeah, that's why most people don't stick to it. But literally, guys, when you can print thousands of dollars from only one funded account, the proof is right there. Just imagine having multiple funded accounts and making tens of thousands, every other day. Um, the proof is in the pudding right there, and it can't be faked really. So how do you trade New York SE Open? That's a whole other strategy. Do you specifically pay attention to AMD during the Open and New York Open? Yeah, I just wait to see, the Asian range to be created at least. If I do see a liquidity pool and I see a manipulation of that, then yeah, I'll be looking for, the opposite to occur and then kind of go in for a retracement. And yeah. So now looking at gold right now going forward, what am I seeing here? Well, I'm seeing that the market has bounced off this major level of support. Okay. Now, I'm not really a fan of trading straight after Sunday open, like a Sunday night, whatever you want to call it. I don't really, take those type of trades. So I wait for the market to usually give me structure to work with, maybe on a Monday or a Tuesday, and then, or maybe after a Monday. So let's say tomorrow, Asian session gets created in London, and then after London is usually when the time I look to take a trade. But overall, what we can see here is a clean example of the market bouncing from support. If it respects this level of resistance, then we can take a trade back into this purple level of support. And then if it breaks this level, you can maybe expect a retracement into here and then a continuation. So that's kind of the trade idea I'd be looking at to continue this bearish momentum, because overall the market has taken from this retracement level. And this is exactly where I took profits, as well as that because we did have a trend line, sort of going there, and the market really did nicely respect that. And yeah, so this was again called out with the team. And again, this is like, notice how I'm not like calling any strategy wrong or incorrect. I'm utilizing multiple things. You guys have probably heard a lot of people talk about trend lines not working and Fibonacci's not working, support resistance not working. This is, these are definitely things you can utilize to help build your confidence and therefore build confidence. And when it comes to well, yeah, when I put it all together, exactly. So yeah, my main foundation of trading overall is understanding liquidity, understanding the foundations such as supply and demand, and having key levels, and then price action. Once you have those three things, then you can add your trend lines, Fibonacci's, order blocks, fair value gaps, AMD's concepts, silver bullets, whatever you want to call it on top of that. But once you have the main foundations, then you're on the right path, right? And you want to make sure you don't divert from that. But overall, that's what I'm kind of looking at on gold. Let's have a look at any other pairs. If you guys have any suggestions, let me know. I'll have a look at these questions for the time being. How did you go from full-time work to full-time trading when you feel that you're missing all the good setup because of your work? And how do you deal with that, time with your psychology because of this? So I'll give you guys a tip that I used when it came to, I'm going to go through the pairs in a second. Let me just answer a couple of these questions. I think a few of you guys said GU, GJ, NAS. Okay, so GU and GJ are the main ones right now. And again, guys, if you're liking the stream or whatever the webinars, just post it on your story, tag me. I'll be sure to repost it. And yeah, let me know, because then obviously we can do this more. Hopefully we might even do them weekly. And yeah, we'll see from there. But yeah, to answer your question, sorry, regarding going from full-time trading, full-time work into trading, what I would do when I was paper trading and when I was first starting out was I would usually go on the 4-hour time frame. Okay, I'd have a blank chart, and what I would do was I would predict, because I know I would miss, I would work 12-hour shifts. So when I'm working 12 hours, that's literally from London open until like almost New York close, right? And that was, the type of distance I was working. So what I would do was I would go onto the chart and I would, I would analyze, the night before or whatever. Okay, so like I'm doing right now, and then I'd post like I'd make a prediction almost, right, on the 4-hour or the 1-hour time frame, and I'd be like, okay, so the market's here, and with the arrow tool, I would just be like, okay, so from here the market could continue to the downside, then retrace up, and then continue down. Right, I just make like one little prediction like this, right, I'd make one little prediction like that, for example, and then I just leave it, right? I do that and I do it across literally. You see all these, I had many more pairs in this. I don't know where the rest of my lists are, but I had multiple lists. And basically, yeah, I'd go through all of them, right? And I would just do for USD JPY, USD CAD, CAD JPY, GU, whatever, as many pairs as I possibly could. And what I would do is I'd make my prediction for them. The following evening, when I'd come back from work, I'd have a look at it, and I'd be like, okay, cool, the market did play out in that favor or it didn't, and I just simply review. And then once you start to develop an edge, and you find that you're confident, start on a demo trading account, start paper trading, start demo trading for only a little while, just so you can get used to the platforms, and then invest into a $10,000 challenge, for example, at the bare minimum, right? And then work your way from there. There's no really point kind of going and working with a few $100 accounts trying to flip them. Like, even if you do manage to get an amazing percentage gain on that, it's not going to be affecting your life. Whereas if you get a big percentage gain on a funded account, right, then you can go ahead and literally you know, it'll make thousands for you, right? If not hundreds, and have a much bigger impact. And again, don't worry about the psychology too much to begin with. Focus on the edge, focus on the foundations. If you're, sniping on the market whilst you're at work and you're seeing all your predictions like working to perfection, across like 10 out of 10 pairs, then you'd start thinking about, taking trading seriously and going into it fully. US 30 and NASDAQ, yeah, for sure. So I'll get onto that. Okay, so let me go through GU right now. So when it comes to GU, honestly, what I could do is I could literally just delete a lot of the markups right here. But overall, this is kind of what I'm seeing. Let's get these yellow lines. So the market has respected this major level of support, resistance, sorry, and it has stopped at this other major level of support here. So what I'd be waiting for, guys, when it comes to GBP USD, is on the 1 hour time frame, on the 30-minute even, is since we've been trending to the downside for quite a while right now, and this was a very nice retracement, I'm not seeing so much impulsivity. So what I would be waiting for is if we can get the market to come down slowly into this area of support at 128.560. And then if we can find rejections here, then I'd be happy to try and take this trade to the upside. And that would in turn then create us a double bottom here. Okay. And that would then hopefully create the market to move up and then continue to the upside. So that would be the main kind of trade I'd be looking for. On the smaller time frame, like the 5-minute, 15-minute, you could just wait for the market to base back up to here. And then, those price action signals to take the trade down and continue that momentum. Just understand the market has previously rejected off this level here. So it could do it again as it arrives here. If it does, however, oh, I stopped working. Okay. If it does, however, okay, I think it was in replay mode. That's trippy. Let me just go back. Okay, yeah. So if it does, however, come back to the upside. So let me just get rid of this. If it does, however, come back up to this resistance at 29,750, then you could either look to take shorts, or personally, I believe by then, if the market's doing that, then this will be like a higher, low, higher, low, continue and then just take off back to the upside. And targets for this area would then be, somewhere around this region here at 1.3200. That would be kind of my like short-term target going forward. So we look at GJ very quick. Have a look at the chat. What's the ideal risk that you put behind those funded accounts? So behind these funded accounts, it depends on the setup. So if the setup is something where I've caught the trade far from my area of support, then I have to force myself to enter with lower risk, or I can enter with the same risk and take a bigger hit. It's up to me, right? Like, again, you might be thinking that's a stupid idea. If you enter with, like if I go ahead and enter far from my zone and I'm, exposing myself to higher risk, and I, enter with higher risk, there's two things that can happen. I could actually gain higher reward from that, number one, right? Because the trade idea might actually pay out. And number two, yeah, I could, lose a lot of money there. But that's just depending on me and whether or not I want to, go about taking that. So let me just see here. Okay, cool. So read a few more questions. I don't usually use personal accounts at the moment. I'm sticking to mainly prop firms, and then I'm investing that capital into other projects, and just a few other things. Because right now, prop firms are probably the easiest way to make the fastest money with the smallest risk. And my advice is, to get rich, you want to take the highest amount of risk with, little capital, and then take low risk with a lot of capital. That is a very simple way to go about it. And yeah, live streams, I do New York Open, yeah, Monday to Thursday, and occasionally on Friday. Friday, I might do a public one on YouTube or something, or Kick or something. I don't know. We'll see. In a week, how many times you send trade ideas throughout the whole week? What's the ideal risk? Which time frame are your major levels? H4 a daily are my major levels. And what else have we got? Okay, that's pretty much it. How do you scale up in prop firms so fast? The easiest answer to that is securing a payout. Okay. And that payout has to be enough to cover, 4 or 5 challenges for another account of that size. And then just keep on going, don't just get comfortable with one. Having said that though, don't go for a million firms, just go for the more reliable ones. And yeah, don't just go for any other firm. Go for firms that, people can recommend that are, have got, that makes sense, of course, right? Make sure the funded stage rules make sense and the challenge phase stage makes sense, and kind of go from there. Now, as for GBP JPY, going to the 1 hour time frame, what I'm liking here is we've kind of created a clean, if I just draw it out here, a kind of right, a left head, and a right shoulder here on GBP JPY. So on the 1 hour time frame, long term, I'm talking, you could go for a trade idea, something like this. It's a very late entry, for example. But what I'm seeing is, something like this could definitely potentially play out because the market has respected this level of resistance, which we marked up a good while ago. And yeah, overall, this is a definite trade idea you could look at. But on the short term, what we're looking at here is clean market structure, higher high, higher low. Well, invert head and shoulders, higher high, higher low, higher high, higher low, higher high, into a level. Now, the market could easily make a retracement and then continue this move to the upside. So having said that, what I would look for now on GBP JPY is if we can continue this Fibonacci long, and if we can, stay within this sort of trend line. I doubt it, to be honest. But if we see confirmations within this area here, then I would look to take the trade to the upside, right? And trail my stop losses because, it could reverse at any time. And on the short-term side of things, if we're looking at bearish, I would then look for the market to give us a potential Fibonacci short from high to low and come into these areas here, or at the worst case, create, somewhat of a rejection here or a double top, and then come to the downside from there. And if we get some rejections here or here, you could enter with your stop loss above this high and then look to take the market to the downside. So that's kind of what I've got on GJ for now. What would you say to someone who's trading? Just answering some easy questions here. All right, cool. Yeah, these levels of support and resistance, supply demand. I go into more depth when I teach that stuff, but for now, I was going to give a quick outlook with US 30 now, and a lot of you guys are requesting this. I personally haven't really ever traded indices. I might look into it. Let me know, guys. Do you think I should start into it? I don't know. Like, I've seen a lot of people trade it, and I know there's a lot of volatility in it, but I prefer gold, honestly speaking, because I just find that to be the cleanest pair. Like with this, it's very session based, but at the same time, it is definitely clean. So what I'm seeing right here is the market respecting. I'll go to the daily time frame. In fact, let me have a look. So we've got an engulfing on the daily. Again, with it being election week, guys, by the way, you're going to see some extremely insane price action. Like you're going to see some crazy stuff. I remember like 4 years ago when I first started trading, roughly around that time. It was insane. I actually remember it's crazy looking back at it. It's like an anniversary now. I don't know how long. I know I can't remember the last time an election happened like this, but I know it's going to be some crazy moves. So make sure you guys, basically beware. But at the same time, I'll be honest, guys. I'll keep it 1,000 with you. You're going to hear a lot of other mentors telling you to stay out of the markets and so on. Guys, if you have a prop firm account, right? I'm not saying gamble or anything like that, but this is a time where potentially you can make a lot of money, and the downside risk is really not that big. So just understand where there's risk, there's definitely reward. And that's how, I've scaled to over $350,000 in payouts, coming on to my third year only in trading. And it's insane, right? And again, this only comes with taking risk, being aggressive at times. You need to be aggressive. And where does that come from? That comes from you knowing a setup. You don't need to know 7 different trading styles and trading techniques. I only know 3 trading styles, right? Trading setups or set strategies, let's just say. And that's what makes me profitable, because I can see when I can use trading setup 1, I can use trading setup number 2, and trading setup number 3. That's it. I don't need to know so many more. I can learn a lot of others, all right, or understand, or teach myself all the others, which is good, because maybe if the first 6 don't make sense to you, then the 7th might, right? So always look at it from that perspective as well. Always be a student of the game. That's how I got far in this game as well. I learned a lot from just going from mentor to mentor, and also not hopping mentor and changing strategies. Mentors in terms of taking advice from different people when it comes to psychology mainly, but sticking to my foundations with supply and demand, because that makes the most sense to me. Okay. And yeah, that's kind of it. What's his opinion? I think about 200K campaign for this. Yeah, definitely. Robert, you could definitely do that. There's some new things coming in the market, so you could definitely take advantage of that. So yeah, what I'm seeing with US 30 right now is clean bearish structure, and I'll just see on a continuation of this, to be completely honest, a continuation of this bearish momentum up until these lows over here at 41,760. So if I just go to the 4 hour here and have a quick glance, what can we see? What can we see? So we've got definitely resistance there. Okay, so overall, I'm just looking at the market giving us these rejections here. Stop there. Okay, so right here is a nice sort of area. Okay, so what I'd be looking to take on here is, if the market can break below here, look for a retracement to continue back down to here. When it comes back down to 41,760, I would then look for a potential bullish move to the upside if we can hold this area as support of 41,760, or if it might come down to, if guys, we're seeing on the 15, right, on US 30, if we're seeing corrective price action maintain. So if the market's slowly moving to the downside here, I don't really favor it, to be completely honest, but there's a high potential of the market creating a new bullish, trend, and potentially just taking out this trend line liquidity that I'm seeing here, right? Not really, but yeah, overall, honestly, I just favor bullish moves. Sorry, bearish. So I would like to see the market continue, and if we can break below these lows, retest here, come into here, break here, continue again, and we've just been trending very, very, slowly to the downside. And we have created somewhat of a left head, and then like a little right shoulder here, break, retest, continuation. And then if we are going to find some longs, we could find them from 41,760, or this major level right here at 41,450, you could even say, or 430. So yeah, they would kind of be the areas I'd be looking for. But right now, since we've broken below the moving average, you could expect a rejection of that and then a continuation back to the downside until otherwise. So have your levels marked up, wait for the market to approach those areas, and then kind of take off from there. And that's pretty much it. I'm not gonna go on for too long. I hope that made sense, guys. And how long was that so far? Around good 45 minutes. Did that make sense to you guys? Put a 1 in the chat if you guys kind of followed me throughout the breakdown, if it made sense, as in you're following what I'm saying, and it was all making sense. Okay, perfect. So if you have any more questions, let me know. Do you put break evens or partials or take profits? So yeah, like for example, when there's a high risk news event, um, not high risk news event, sorry, when I'm waiting for the market to um not waiting for the market, when I'm in very good profits and I have a potential for the market to swing a lot in my favor, I definitely see the market, you know, like if I see it continuing in my favor, then I'll put stop loss to break even and let it ride out. But honestly, guys, I find when it comes to prop firms, at least, the most profitability in intraday trading. But at the same time, having said that, if you can get yourself a swing account, with any of these prop firms, and you're taking the same type of trades as myself, like my style of trading, because with my style of trading, for example, like although I took profits on this trade right here, on this insane trade over here, I took profits over here at this area here to pass a funding challenge for myself, right? So because I passed the challenge here, I didn't really need to trade this. But when it comes to like funded accounts, right, you need to sometimes have, not have to have, but like this trade over here was a trade that, was only for 7, 8 hours. It wasn't like, a trade that took on like, look, 6.5, 7 hours. Within the day, you could be catching potentially a 1 to 12 risk to reward, which is insane, right? And these type of trades, when the market structure is so clean like this, which is something I mentioned to my team, I was like, guys, these are like A plus setups, which you can put 2, 3% risk behind. If I put 3% risk behind this on a $200,000 account, you're looking at potentially a $60,000 day, in the market, a 1 to 10 risk to reward with $6,000 risk, right? That's $60,000 in a single trading day. And there's no rules being breached here, especially if you're not closing. Like, again, as you can see, this is like a news event here, I believe. What news event was this? So nothing crazy, core PCE price index. And by this point, the market was like way down here with a closure right below this major level of support. So there's no way that the market was reversing. So when you know your setups, and you put good, and this is how I've hit like 20K plus days, when I found a setup that I know and I understand and I believe and I see it, over the course of just a few hours, then I'll put good risk behind it and I'll take profits within the day. But then when I can see the trade expanding, like for example, if I was holding this trade right now on a swing account potentially over the weekend, we could be targeting these lows over here or these lows over here and potentially doubling our profits, right? That's realistically how you can get, these, you can either go for a higher risk to reward or you can hold for longer. And it's up to you. You can either hold for a longer time, which can, again, it'll be a bit more of a painful hold because, you can be seeing 60K, 20, no, you can forget 60K. You could probably, in this scenario, obviously, in this scenario, you could see 60K, 70K, whatever your risk was, maybe 30K, whatever, then a pullback all the way down to 20K, half your profits just wiped out, right? And you have to be comfortable. If you want to really take advantage of these moves, you have to be comfortable with that. But I'll be honest with you guys, when it comes to trading, you don't need to catch the full move. You just need a piece of the pie with a good amount of risk behind it, and you're done. Secure that for a payout. Trade another funded account if you want to really get that itch out your body, and then kind of go from there. So I hope that made sense to you guys. Let me just read some of these comments. But yeah, that's pretty much it. I just bought a funded account. Is there anything you see during? Yeah, of course. Yeah, guys. Watch this recording back. You guys will see it. I'm going to upload this recording right now in my channel on Telegram, and it'll be uploaded on the Leveled Up Discord. I trade both sessions, London and New York. Broken you playing your approach on that gold trade. Just watch the recording back, Mohammed, and you'll see. And yeah, that's pretty much it. It definitely isn't wise to trade during the elections. I would just say wait. It's not wise to trade during it because there's going to be some crazy, um, moves. And yeah, when I say my team, do I mean live streams? Yeah, the SSC Discord and Academy. That's where I'm usually streaming. But I'm going to be doing these live streams over here every 2 weeks on a Sunday. If you guys want me to do them every week, just let me know on the Discord on Leveled Up, and we'll see. If any of the mods want me to do it every week, and we'll get something sorted. But that's pretty much it, guys. I appreciate you guys seeing this. I'm going to stop the recording now.